So the moral of this story is about to be: there's absolutely nothing you can do. It's just,
That's right. It's just coming. Yeah, there's nothing to do here.
That's great. Can I introduce you to an acronym that you should know? BOHICA.
BOHICA. What is that?
Bend over. Here it comes. All right, Matt Robison and Mike Morton. And I'm just realizing that this episode of Financial Life Planning should not have started with that acronym because it could apply to this entire episode. Maybe that's what you're about to get.
Good, man.
No, we're gonna serve you up something that is more useful than that little intro made it sound.
Hopefully.
Yeah, please. Otherwise, just go to the next episode. No.
Yeah.
This is what we're trying to do, if I understand this correctly, is there's something coming, and what you're trying to explain to people is this something to worry about or not? You're trying to make this as binary a threshold as possible so that they can either dispense with it mentally and go back to worrying about lots of other low-lying things in their lives, or just kind of keep it on your radar screen as something to pay attention to. Yeah,
that's exactly right. This is the Tax Cuts and Job Act. I always mess this up. Tax Cuts and Jobs Act from 2017. Is that right, Matt?
Yep,
2017. And it is set to expire at the end of 2025. So about a year and a half from now. And so there might be some things in the expiration that are going to revert back to pre-2017 or going to change that you might want to pay attention to now to get prepared. If that happens, if Congress doesn't make a change, it is set to expire in 18 months.
All right. So here's the game that we set up for this one. And is this a gimmick? Yes, it's a gimmick. We set it up as a bit of a game. Okay. Yeah, you got us. All right. So you picked a list of like 9 or 10 things. Yeah. And then we said, that's too many things. I can't even remember how to tie my shoes correctly. So I'm going to challenge you to give me 3 things. Okay. 3 things that are going to change or expire if the Tax Cuts and Jobs Act does indeed sunset. And for listeners out there, this will be a trigger to either say, all right, if one of these things might apply to me, this is something I have to pay attention to. If not, I don't, and I can feel my mindset at ease. So you're still getting value out of listening to this, because by the end, you could get that's something I could cross off my list.
Yeah. Oh, that's going to feel good.
Oh, it's going to feel so. Or you're going to get, well, this is a problem.
This is a problem.
Call my financial advisor.
Yeah, what's it going to be?
Hey, can we give a little bit of a caveat up front? Talk to me about, I know this is more my area of expertise than yours, but talk to me about when you're talking about an act of Congress, especially that involves taxes, it's not a sure thing that something that was a tax cut is actually going to expire. Even if these things are set to end, to sunset, it's not politically popular for taxes to go up. So, how do you think about that? And how do you talk to clients about something like this where, well, Congress could always swoop in and try and get themselves a little bit of credit by keeping people's taxes lower?
Yeah. Well, it's analogous to just everything else that we talk about the future. We're just making it all up as we go. I mean, you have to assume something. So it kind of falls in line with everything else that I do. It's like, what kinds of investments and what should we do? And so it's all about risk and reward and the trade-offs. And it applies differently in everyone's situation, so then applying it to your situation. So in this case, there's, a flip of a coin, whether it gets extended, parts of it get extended, the whole thing gets extended or not. I say more a flip of a coin because in this case, Congress has to act. All right. So that lowers the percentage, in my opinion, of like, is something going to happen? They actually have to, this is set to expire. So they would have to vote or have amendments or whatever to, have parts of it or the whole thing extend. And I think that's why it was agreed to, first of all, right? It was like, okay, we're doing these tax cuts but only for a limited time, right? And so they got more people on board to vote it through, knowing it was going to expire. And here we are,
Yeah. I mean, look, I will not talk about the deep weeds of this, which is there are rules. And in order to make the cost of this appear to be lower, you set things to expire at a certain date. So it says, well, in theory, this is going to end and therefore it's going to cost less. Doesn't really matter. All kinds of weeds there that aren't that interesting in this show, or at all. But I think you're totally right that you can't count on any particular outcome here. And the real nub of it is there are pieces of this that could get extended. There are pieces of it that could expire, and there are pieces of it that could be something in between. They could sort of change them. So absolutely. So I think the public service announcement of this is we just want to give people as simple a guide as possible to here are some highlights that, you hear about that are affecting your kind of clients. And if these are things that are affecting your sample of clients, they might affect lots of other people. Yep. So here are the, all right. Challenge number one, give me your first of your grab bag of things that could expire that might be relevant.
Right. The big one, and you're going to start hearing a lot more about this, is the lifetime gifting exemption. So currently, during your lifetime or at death, it's combined, there's one number you can give. Any individual can give money to any other individual with no tax consequences. You don't owe taxes. Neither individual would owe taxes. It's called the lifetime gifting exemption.
This is the Shawshank rooftop scene where it's like, the IRS allows you to give a gift and therefore Andy Dufresne doesn't get thrown off the roof.
That's right. And they combine, it used to be different, like what you did during your life versus at death. They were like two different things and so they combined and that was good. So now it's just one whole thing. All right. And that number is about 13 million, just over $13 million. Okay. So Matt, I can give you $13 million and neither of us has to pay any taxes.
Yes, we agree.
We agree. If only I had 13 million. So that's great. Right. So that's the current lifetime exemption. This is a big deal because as you start getting above that, you're going to get taxed at almost 40%. All right. So if you were to die, Matt, with $25 million and you give that to somebody or multiple people, this is from one person. I should say it this way, one person to multiple people. Okay. So if you die with 25 million, you're allowed to give 13 million out. That's if you hadn't done any during your life. And at death, one thing, 13 million, everything above that starts getting taxed and pretty quickly it goes to a 40% tax rate. 40 cents of every dollar is going to go to taxes. Okay?
So, I mean, just enveloping this, 40% of 12 million, like I die with 25 million, I can give away 13 million, 12 million left over. I know it's not all taxed at 40%, but you're talking pretty about close. Like $3 million. Yeah, $3 million bucks in tax.
So I'll give you a story. So let me tell you, at the sunset, that's getting cut in half from 13 million.
13.
This is the big story going down to about 6-7 million. Oh. All right, we don't know exactly because it's based on inflation. Okay. But somewhere around there, it's getting cut in half. That's what it was pre-2017. Okay. Okay. So here's the story. So I have a friend, we'll call her Barbara. She's older. She's got she's in her like 80s. She's got 3 adult children. And she's currently worth about 8 million, just herself, no husband. So she's currently worth about 8 million. So this is no problem. She could give out the 8 million to her 3 adult children. It's under the 13 million, so no big deal. But she's in pretty good health. So say she lives another 10 years, and in that 10 years, maybe those investments double. So her 8 million goes to like 16 million, right? Because it's invested in low-cost index funds. And the sunset, the exemption goes down to 6 or 7 million. So now you have a big problem. Now she's 7 million over the exemption. So by the time she passes in 10 years, her estate's $7 million over. And like we just said, you're going to pay almost 40% on that 7 million. So millions of dollars are going to taxes in her case. So she needs to start estate planning now. Okay, because her estate is worth 8 million.
You're going to say she has to start dying now. That's really morbid, man.
No. No, not start dying now.
Oh.
Just start. That was your comment. Like, wait, she's got to die more quickly. No.
I can't account for where you're going with these things.
There's no accounting for what's coming next, Matt.
That's right.
So yeah,
but she has to start estate planning.
So it's
now,
estate
and she has
planning.
to do it on the basis of, this is going to happen. The expiration is going to happen.
Right. This is why you're going to start reading a lot of stories about this, is because if it does expire, going from 13 million down to 6, if you're a couple, you each have 13 million, that's 26 million going down to 12. It's a really big cut. And you can do things now, since it's a lifetime gifting exemption. You can start gifting money now, and that counts. So anyway, there's all kinds of things you can start doing. But the moral of the story here is this thing is coming. The longer we get into I would start now, like we started with Barbara doing planning now. And the longer we go through 2025 with no act from Congress, to extend this, is when you start pulling the trigger. Oh, geez, now we're getting closer. It really is coming down to 6. There's not like movement, to extend it. And you start implementing some of these planning.
Bottom line, this could apply. So if you've just heard, this is like the Jeff Foxworthy, you might be a redneck list. Wow, that's a really dated cultural reference.
You can't say that.
Yeah, well, but it was him. It wasn't me.
That's right.
Kind of like you and your morbid obsession with the end of your fictional Barbara's life. All right, so that is one. That is one that people might want to pay attention to. Give me your second.
All right. The second one is a general comment that your taxes are going to go up. As you might know from the title, Tax Cuts, Jobs Act, taxes generally went down for folks. And this happened in a couple of ways. One was the exemption on your taxes. So the way taxes work briefly is you take all the money that you made in the year, you take out a couple of things, but take all the money you made in a year, and then you take a deduction, okay, called the standard deduction or the itemized deduction, and then you pay tax on that lower number. All right, so you want the biggest deduction possible because you're going to pay taxes after the deduction. Well, the tax cuts increase the standard deduction significantly, so therefore you're paying less taxes. You take that standard deduction off your total income and pay less, okay? That standard deduction, like I said, was increased significantly, so much so that only about pre-cuts act, about 1/3 of people would take the itemized deduction, but now only about 10% take it because the standard, most everybody now just takes the standard deduction. All right. So bottom line, your taxes may be going up post 2020, the end of 2025. And so if there are ways to use that to your advantage, being in lower tax brackets now, that's something you might want to pay attention to.
I see. Would a rule of thumb, I'm making this up, I could be wrong, would a rule of thumb for this be, hey, if before 2017, assuming that your income is similar these days, if before 2017 you tended to itemize, then you might have benefited from this increase in the standard deduction, and you now might be going back to that earlier tax approach.
Yes. The caveat to that is no one's going to know what they paid back in 2017. Everybody, and your situation's totally changed.
Forget my rule of thumb. My rule of thumb is like a rule of all 10 fingers. It's not useful. Forget it.
That's right.
All right. But your taxes could be going up. So what's useful then about that is we've talked about so many options on this show for, pay taxes when your tax rates are low. So if you think your tax rates might be lower now might be a better time to absorb some of those things that might cause you to pay taxes.
Yeah. And I will give you a rule of thumb on this one that I typically use. And this is for, pretty good high earners. Okay. So you making a couple $100,000 as a family. If you're in the 24% tax bracket, I would use that to your advantage. I don't think you're going to get less than a 24% federal tax bracket.
I see.
All right. Like if you're making a couple $100,000, you're in the 24%. I don't think it's ever going back. Like I don't think it's going to get lower. All right. But it may get higher. So I would use that to your advantage. That's a pretty low tax bracket. All right. Well, so you can use that as a rule of thumb.
Yeah, I'll give a rule of thumb here. And I truly do not mean this to sound political. This is just a fact. This is just math. The bulk of the benefits of the Tax Cuts and Jobs Act, boy, I used to be part of my job to come up with names for things like this, and this is just drivel. The bulk of the tax benefits went to, a bunch of it was larger corporations, and when it came to individual taxpayers, it was skewed toward higher income people. And so if you're listening to this and you are in a higher income bracket, then chances are you were getting those benefits. What's the reverse of that? The reverse of that is that if this expires, your taxes are probably going up. If you were in a lower income bracket, you got very little benefit from this. Again, this is not a political comment. This is just math. So you got much less of a benefit. You probably don't have to worry about this quite as much.
Yeah, that's right. Yeah. And I would say, most of my clients and maybe many listeners of the show fall into that, a couple 100,000 of income. And so this is pertinent. But yeah, if you're at the lower end, it's not going to apply so much. And if you get in the higher end, 400,000 and above is what we've been hearing a lot about. And that's still in the mix, a lot of taxes. And you're right, the businesses got a big cut in other places. So that's the takeaway here is if you're, in those kinds of income brackets, if you're in that currently in that 24% marginal tax bracket, I would take advantage of that. Things like Roth conversions. If you have your own business, can you recognize income earlier, during these years and pay 24 cents on the dollar rather than maybe down the road it's 26% or higher. And so some of those strategies.
All right. Before we get to your number 3 choice, do you want to just do a 30-second drive-by on a couple of things that didn't make the cut that are just kind of fun, interesting to throw out there?
Yes and no, not really, because we kind of mentioned them. Like it's things like the standard deductions changing, the child tax credit is changing. It's things kind of built in, like
you're not doing child tax credit.
I'm not doing child tax.
I was hoping you'd do child tax credit so that I could
have more kids.
So I could say, have kids now. Like schedule more hot dates. Don't wait to 2026 because your child tax credit exempt is gonna. You could miss out on $1,000. So plan your entire family and life around that $1,000.
We should have a whole episode on how much kids cost. We should break it down by like year by year or like phases.
We haven't done that? You're kidding me.
How much kids cost. It's unbelievable. No, we have to do that. That'd be great.
That's such a good idea.
Hey, here's the spoiler. It's a little more than $1,000 you're going to get in a tax credit.
That's what's so ridiculous about that. So I've already referenced the fact, like back when I worked in Congress. Back when I worked in Congress, the first time Nancy Pelosi was the Speaker of the House, she instituted all of these reforms meant to make it less likely that people would be influenced by lobbyists. And so they made it so that you couldn't accept a lunch that was worth anything of any amount if you were a staffer. And I'm like, come on. So like the child health advocacy organization that took me to lunch last year can't take, and I'm going to tell my boss something differently about kids because they couldn't take me to lunch. Really. Now, I did once get taken to lunch by the NRA. And it didn't change what I said to my boss, but I'm not like super duper proud of that. It just happened. Okay. It's
Was it at the shooting range? Lunch at the shooting range?
I did get taken to a shooting range. I did. And they showed pictures of their recent safari. And I'm like, oh, wow. How did they pose with all these animals? Wait, that animal, that lion has, this is going to sound horrible. Never mind. The point is the animals, these were all animals they had shot. All right. So this is NRA people. They're fascinating. All right.
Thing.
All right. So child tax credit is not making your list because it's not that interesting because it really should not change people's lives that much.
Well, it's kind of bare. It's like a lot of these, the personal exemption, the itemized exemptions. These are other things on the list that they're buried in the tax code. Like they're interesting to me because I review tax returns, but they're buried kind of in your tax return.
Actually, can I amend my earlier statement? They're very important. If your family's making $50,000 a year, then that bump up is a significant. It's a 2% increase in your take home earnings. So I don't mean to belittle that one bit. It's extremely significant. What I meant was, it's not significant in your decision whether or not to have children.
Well, I should hope not.
We're not trying to incentivize people to have more children. There are countries where the birth rate's falling and they have to seriously do that. That's not the purpose of this. All right.
That's not the purpose of
this. Before I intrubulate myself further, give me our number 3, please.
The number 3. Number 3 is going to be what you referenced, the business exemptions and stuff. So it was a big deal. I think it was the business tax rates, really got cut. And this flowed through to what I deal with a lot is smaller business tax, the QBI, qualified business deduction. And so that is getting nixed. And so it's something to just be aware of, that the business taxes are significantly changing.
I will not be political in the following statement. Just take it at face value. The corporate tax rate was a permanent reduction.
That's right.
This 20% deduction for pass-through business income, which applies to small business people like I have been and might be again, that is expiring.
That's right. Yeah, thanks for pointing that out, Matt. So the permanent for C Corps, big businesses, but our small businesses, they did the 20% reduction because when they reduced big businesses, they were worried like, oh, everyone's going to change into a C Corp. All right. All these S Corpses, all the LLCs, there's a big incentive now. Like you pay way less tax. And so they also gave a deduction for the S Corps, and LLCs via this QBI deduction. And that's getting phased out. But good news for me, Matt, speaking about lunches and meals, that's now currently, I can't deduct any of that from business expenses. All right. But that's coming back. So I get to deduct money now for meals and entertainment starting in 2026. So we can go out to lunch. I can take you out to lunch.
Oh, gosh. Speaking of being out to lunch, I want to wrap this segment so we can get to our one thing, because we want to talk about our summers. All right. So take home reminder for people. If any of this has sparked this might be me, then pay some attention. If not, then relax, go out to lunch for the rest of your summer.
That's it, man. Yeah, that's it. That's great.
Let's get to our one thing. You want to update your summer?
Yeah, I'd like an update to this summer. Summer updates, Matt. What's going on in life, man?
Oh my gosh. This reminds me of the Steve Martin movie, LA Story, where Patrick Stewart, Jean-Luc Picard, appears in a scene as a snooty maitre d', and he asks Steve Martin, where do you summer? Oh, he's French. Where do you summer? Where do you spend your summers? So tell me, where are you summering? How's your summer going?
You know what my summer is, Matt? It's your nightmare. You know where I've been spending all my time?
The beach?
At the baseball diamond.
Oh, gosh. Oh, that's so much worse. It's terrible.
At least I wasn't like swimming in the water. This would be bad tonight. We're just,
did you have cats with you?
Cats, I would say cats in the water watching baseball.
Watching baseball with a cat on your lap. Can I make this any worse?
Yeah.
All my pet peeves.
That's great. Actually, it's been really great. So yeah, we've had summer of baseball. My son just wrapped up last weekend his tournaments. There were like 7 or 8 of them in a row. So it was great. Watched a lot of baseball games, and it was fun. But except for the heat of Florida, we went down to Florida for a few games. And
you did it.
This is in late July.
The third thing. This is so terrible.
So great.
Oh, God.
I didn't have a cat on my lap. It would have been a dead cat because it was like 100 degrees, and we're just standing around.
Listen, if the cats would die in the activity that you're doing, it might not be the best activity. Wow. You know what you've just done? This is great. You've made me feel wonderful again at the end of an episode.
There you go.
I didn't have to do what you did. That's so bad. Hey, can I give you an upbeat one?
Yeah.
From my summer?
Yeah.
This is actually a little piece of advice for people. You can fix anything in your house if you watch YouTube. It's amazing the resources that are on YouTube. My father-in-law was an extremely handy, like self-taught guy who could fix anything. And he gave me, I grew up in an apartment with a superintendent in New York City. So like everything got fixed for us. So I never learned to do any of this. So he gave me the Popular Mechanics Guide. It's like a big, thick book to fixing everything in your house. I don't use it anymore. It's all on YouTube. So recently, I've been getting increasingly frustrated with the fact that our oven wouldn't heat up, particularly an hour and a half to heat up. And we smelled gas. This was clearly bad. And I made the classic mistake of calling a repair technician first. And luckily for me, I got a super honest man. I got an honest human being who said, like, the part's going to be $250, the labor's going to be $350, you're going to spend $600 on this. I said, I'm not going to do that. He said, listen, go on Amazon. Here's the part you need. It's $25. Just get a generic, and then look it up on YouTube. You can figure out how to do this.
Wow.
That's exactly what I did. I got some key help from my brother-in-law, who's more, he's a farmer. And so he has like gas-fed appliances and mechanisms that he's used to dealing with. I was a little nervous about refitting the place that fits the,
That's what I was going to say, Matt. Did you,
I don't want to
you're messing with a gas oven? I'm not sure I'd recommend like using YouTube for messing with gas.
You know what? No, and the smart YouTuber who provided the video does say, like, if you're not familiar with doing this, don't. So he's right about that. But no, I had someone with a little bit of experience kind of like there, we did this together. But man, I saved $575, and it was all step by step for my exact model. And you know what the thing is? This doesn't just apply to my oven and the igniter that was broken. Like everything is on there. It's really amazing. So that's
awesome.
That's my new tip.
You didn't have to watch baseball.
I didn't have to, but I was feeling particularly self-flagellating that day, and so I got a cat. And,
there you go.
Turned on the socks. All right, man. I guess that's it.
All right, dude. Well, thanks.
All right. Yeah. For Mike Morton, I'm Matt Robison. See you next time.
Thanks, Matt.
Thanks for joining us on Financial Life Planning. If you like what you heard, please subscribe to and rate the podcast on Apple iTunes or Spotify or wherever you get your podcasts. It makes a massive difference. If you have a comment or question, please email me, mike@mortonfa.com. Until next time, thanks for tuning in. This recording is for informational purposes only and should not be considered for investment advice. Opinions expressed are as of the date of recording. Such opinions are subject to change. I cannot guarantee the accuracy or completeness of the data presented here.